Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for December 11th, 2010. Okay, let's look at the daily view of SPY here. We didn't exactly get that pullback as anticipated, but instead the market just kind of went higher a little bit at a time. So we created another new high, closed above another new high on Friday. As a result, the market is a bit overstretched from its moving averages. You can see how far it is away from the moving average, kind of like how it was before. So it's hitting that limit. And in addition to that, looking at the stochastic, you can see the stochastic is approaching or already in overbought territories. And every time it's in overbought, at least on the daily overbought, we can expect some kind of a consolidation, either sideways or at least a pullback. And basically, we are there with the overbought stochastic. So that's something I'll be careful for. At least some kind of expect some kind of a pullback next week. Maybe back here, back to this previous high at 122.5. If not, at least maybe even to this 20-day moving average. But again, just because the market's overbought doesn't mean it can't go higher. So, even though we have some pullback levels to watch out for, but also keep in mind the market can continue higher, especially since we have this inverse head and shoulders that I've projected a few weeks ago, that the target for this inverse head and shoulder here was about 125. So we are very, very close to that target. I think just maybe a few cents, 20, 30 cents short of this target on Friday. So maybe that's it. Maybe we've already successfully hit the target, but who knows, right? Just always keep that in mind. We are near a very strong resistance area from previous year, and at the same time the market's overbought. So I'll be definitely very cautious going long. In addition to that, you have the VIX here. The VIX, if you notice, it closed green. It closed positive on Friday, and SPY also closed positive on Friday. And usually that doesn't happen a lot, okay? But that's a bearish sign. You usually don't see that because the VIX and the S&P 500 are inverses of each other. If one's green, the other is usually red. But to see both of them green is typically a bearish sign. So that's just another clue, okay, another clue to a possible pullback, some kind of consolidation into next week. So I'll be very careful going long next week.